Channel. My name is Ron. In this video, we're gonna talk about how to find the best fair value gap setups. Okay. And ways that you could use the fair value gaps to your trading style or add it to your trading style, and how you could use these the best way possible. All right. So one of the ways I like to use fair value gaps, and also this is a trade that I called out earlier today from my signals group and also my mentorship. Everything related to that is in my bio if you choose to do so. But the way I look for it is, first things first, you want to know what type of setting you're in, right? Are you bearish or bullish? All right. And right out the gate, I already knew that we was bearish, right? Because look, we see how prices just continuously to sell off. So buys right now is not really too much in our favor. So I was already had my my buys as bearish for the day, right? Typically when you're trading, you want to make sure that you have a bias. Okay, what I mean by the bias is you want to know what you're looking for. Are you looking for buy setups or sell setups, right? You don't want to really do both, because you're going to confuse yourself and think you're like psych yourself out. Once you determine your bias, you want to stick to that bias. All right, you want to stick to that bias for the day and only look for those setups. Right. So me personally, I was looking for sales because obviously we see that we're obviously in a downtrend on the index. Okay. So basically, what I did was I like to look for fair value gaps on the 5 minute. The 5 minutes is like my sweet spot time frame. Now, obviously, you can do this on any time frame, all the way down to the 1 minute, but the 5 minute is like my sweet spot. I love looking for trades on the 5 minute. Okay, it doesn't mean it can't happen on higher time frames or lower time frames. Me personally, I just like the 5 minute chart. All right. So first things first was I was looking for. I seen this fair value gap form. Right now, when you see a fair value gap form, the next thing you want to do is look for liquidity to be taken, right? Because once a fair value gap is created, you want to look for some type of short-term liquidity to be taken out. Okay, so the way I look for the best fair value gaps for me is I need to see a fair value gap created, and then afterwards I need to see liquidity taken out on my bias. Okay, not buy side liquidity, looking for sell side liquidity, because I'm looking for sells. Okay. So I like to see this low taken out first before I look for a retracement back into the fair value gap. And I'm gonna show you screenshots and things like that at the beginning of the video to prove and show y'all I sent the trade out beforehand, right before it happened. Okay. So basically, like I said, I need to see sell side liquidity taken out. Obviously, this is where liquidity is going to probably be pulled to, because of the fact that these lows haven't been taken out yet. Okay. So now what I need to wait for is, since the fair value gap was formed, it does not mean I'm looking to enter as soon as it forms and push back into it. I would not take this trade if it comes back into this area immediately, right? I need to see liquidity taken out to the downside first before I look to come back and enter at this fair value gap. So let's just say, for example, price does not take out the sell side liquidity. I would not look for an entry if price did decide to come back and push up. All right. For me to enter this trade, I need price to come take out the sell side liquidity. Okay, now if you press play here, you can see sell side liquidity has been taken. Right now, since sell side liquidity has been taken, my bias is starting to play a part. Now I'm interested in this fair value gap, right, to rebalance itself. So now, since sell side liquidity was now taken out, now my attention now switched towards the fair value gap area as an entry level for my trade. Right, and basically I'm looking to take price down to this next liquidity area, which was the previous day low, right? But I'm also looking to take out or price to shoot to there, right? Because that's my target. Okay, so since this liquidity was taken out, I'm looking for the fair value gap to return back up to the fair value gap, or price to return back to the fair value gap, and look for price to sell down to this previous day low, which is also sell side liquidity. Okay, price likes to pull itself to liquidity, take out retail traders, right? Draw liquidity is very important. Liquidity can be very, very, very helpful once you realize why is price shooting to a certain area, because there's liquidity that has to be taken out. All right. So once I realized the short-term liquidity was taken out, that's when my attention switched over to this fair value gap here. Okay. So now the fair value gap is set in stone. Liquidity was taken. Like I said, the best type of fair value gap setups is when first the fair value gap forms, and then the move, or the leg, I call it the leg of the fair value gap. This is the leg. This is all one big move. The leg takes out some type of short-term liquidity, right? Or some type of sell side liquidity if you're bearish for the day, right? So if I'm bearish for the day, I need to see sell side taken out, not buy side. So in this case here, I see that this fair value gap was created, and right after it was created, sell side liquidity was taken out. So now I'm looking for a rebalance of price back into the fair value gap. Also, to keep in mind that the fair value gap was also at a premium level, right? Because remember, if we go back to premium discount, right? If you're looking for sales, you want to enter at a premium. If you're looking for buys, you want to enter at a discount. So equilibrium was right around this area here. Let me see how low price went. Okay, price went that low. Okay, perfect. So now equilibrium is here. So that means anywhere above the 50% is my area for premium, right? So I'm looking for trade ideas anywhere above here, right? Because now this is the area where sellers are more active and more aggressive, right? So the fair value gap lies inside of the premium area, so that gives this fair value gap even more, confluence, a little bit more power, right? So now once I realize this is a premium fair value gap, now we're looking to enter for this trade. So now once again, price shoots up and we enter here. Bam, that's my entry right inside the fair value gap. We enter at the fair value gap. Bam, entries activated. We're in the trade. Let price play out. Okay, price push a little higher, which is fine. Remember, your stop loss is just at the high, right at this high, right? So when you're looking to enter these trades, I like to enter at the top of the fair value gap because sometimes price taps it and dumps. So I'll look to have my entry there, but then my stop loss will be at the high there, and then my target obviously would be here. So this is what the trade would look like. Okay, something like that. Okay, entry right at the opening of the fair value gap. Like I said, the fair value gap can either fill it, tap it, whatever, but you just want to make sure that you don't miss your entry and you have your stop loss just safe enough, right? Because sometimes price can push through it, get a little bit more, push a little higher, which is fine. But as long as your stop loss at the last low, you're fine. And now I'm looking to target this daily low, right? Sell side liquidity. That was my target. So if I let the price or let this play out, you can see how price delivers to the T right where my entry needed to be. Okay. All right, where my exit needed to be. I'm sorry. Right. Perfect analysis here. Okay. So based off of that, this was a trade for the day. Everyone caught it. This was a beautiful sell. I think it kept on selling, and yeah, so it's so crazy today. That was a trade. That would have been a beautiful trade if I held it. But like I said, I'm not looking to guess and hold. I'm looking for precise entries and exits. All right. Your exit is just as important as your entry. I always look for exit liquidity because typically sometimes when price hits that liquidity run, it likes to reverse. Notice how when price instantly hits the sell side liquidity, it bought right after that. Now in hindsight, you could have been like, oh, I could have held. But in real time, if you would have seen this right here, you would have closed most likely, right? Because now you see price pushing up back to your entry. So in real time, I seen that my target was fulfilled. No need to be in this trade holding or guessing for a later target or whatever. You make your money because you know exactly where price is going to go instantly, right? Because you know where liquidity lies, and you don't pray, you just play, right? You go by the rules, and there you go. The trade goes your way, right? And that's how I look for my fair value gap. So I like to look for the fair value gap created first, wait for it to take out some type of liquidity. Whether if you're looking for buys, you need buy side taken out. If you're looking for sells, you need sell side taken out. Once that happens, wait for price to return back to that fair value gap. Look for your entry, stop loss at the previous high, and then you take your targets to the next liquidity areas, okay, which was here. All right, beautiful trade, guys. So I hope this quick little video helped you guys in any way, shape, or form. Until then, I'm gonna keep making videos, keep dropping banger content. But until then, y'all, I'm gonna see y'all in the next video. Take care and keep on trading.